What if the defining move in XRP does not arrive after regulation is finalized, but instead emerges because regulatory clarity finally enters the market? This question sits at the center of an ongoing debate within the XRP ecosystem. Does price appreciation come before law, or does law act as the catalyst that unlocks price? To understand where XRP stands today, this discussion must be framed within the broader transition towards structured regulation across the cryptocurrency industry. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. Be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. The concept of price before law suggests that XRP could experience a significant valuation expansion prior to the establishment of clear regulatory frameworks. Under this theory, appreciation would occur while uncertainty still exists, effectively pushing prices higher before the general public and more conservative capital are able to participate. By the time rules are clearly defined and safety rails are installed, XRP would already be out of reach for many. This idea implies that early uncertainty benefits early participants, while later clarity benefits institutions at higher price levels. However, recent developments highlight why this theory may not fully align with how large financial markets function. Regulatory progress, while not linear, is undeniably advancing. Even when proposed legislation faces delays or revisions, the trajectory remains clear. Frameworks governing digital assets are no longer theoretical concepts. They are actively being debated, refined, and positioned for implementation. Short-term delays do not negate long-term outcomes. When viewed through a multi-year lens, the timing of individual votes or revisions becomes largely irrelevant. Historically, transformative industries follow similar patterns. Early uncertainty dominates initial phases, followed by gradual recognition and eventually by formal structure. The Internet experienced the same process. Early adopters operated without defined rules, and over time, regulation followed adoption, not the other way around. Years later, few remember the precise dates when early regulatory frameworks were finalized. What mattered was that clarity arrived and allowed innovation to scale. This context is essential when evaluating XRP. While price behavior has often appeared irregular compared to other digital assets, those irregularities are not without explanation. XRP has repeatedly shown sharp upward movements followed by extended periods of compression. Such behavior is typically associated with constrained participation, limited access, and structural uncertainty. In environments where participation is capped, price suppression, intentional or structural, can persist, but that pressure weakens as adoption broadens. Market dynamics ultimately resolve to supply and demand. Demand for digital assets exists today, but it has not yet reached saturation levels capable of overwhelming supply. The missing component is not interest, but permission. Large pools of capital operate under strict mandates. Without regulatory clarity, participation remains restricted, regardless of perceived opportunity. These investors do not speculate first and justify later. Compliance precedes allocation. This is where the law before price argument gains strength. Regulation does not restrict capital, it legitimizes it. Each regulatory milestone unlocks a new tier of participation. Retail investors entered cryptocurrency markets first, reversing the traditional capital hierarchy. In conventional markets, institutions typically enter early, while retail participation arrives later. Crypto inverted this sequence. As regulation solidifies, institutions are positioned to enter markets where retail already holds exposure. This inversion creates a structural advantage for early participants. Institutions entering later must acquire assets at prevailing market prices, often driving appreciation in the process. Their entry is not driven by hype, but by mandate. Once regulatory clarity confirms what is permissible, capital allocation becomes systematic rather than speculative. From this perspective, price appreciation is unlikely to precede regulation in a sustained manner. Instead, regulation serves as the trigger that enables capital deployment at scale. Once frameworks are in place, digital assets can be formally integrated into compliance systems, risk models, and long-term portfolios. This transition fundamentally alters market dynamics. Current price behavior in XRP reflects this transitional phase. Extended consolidation is often mistaken for weakness, but historically, prolonged range-bound movement precedes significant structural shifts. XRP has been forming a defined range, indicating equilibrium between buyers and sellers. As long as critical support levels hold, this structure remains constructive rather than bearish. Relative performance against other benchmark assets further supports this view. When an asset stabilizes against broader market leaders, it often signals exhaustion of downside pressure. In such conditions, even modest increases in demand can catalyze larger price movements. This positioning suggests that downside risk is increasingly limited while upside potential continues to build. The broader market environment also explains the prolonged pause. Excessive optimism often requires correction, not always through price declines, but through time. Sideways movement erodes confidence, encourages exits, and resets expectations. This process is not accidental. It is structural. Markets often advance only after enthusiasm has been replaced by patience. Looking forward, the digital asset industry faces an unusual imbalance. Fundamentals continue to strengthen while prices lag behind. Institutional infrastructure, tokenization initiatives, exchange-traded products, and real-world asset integration are advancing rapidly. Yet valuations have not fully absorbed these developments. This divergence does not represent failure, it represents unpriced potential. When clarity finally arrives, perception shifts. Digital assets transition from speculative instruments to regulated financial tools. That shift alone redefines demand. Capital that was previously restricted becomes available, not gradually, but structurally. This is why regulation is not a threat to price, it is the mechanism that enables it. In this framework, timing the precise moment of price expansion becomes less important than understanding the process leading to it. Markets rarely reward impatience, but they consistently reward positioning ahead of structural change. As regulatory frameworks move closer to implementation, the conditions for large-scale participation continue to align. The conclusion is straightforward. Sustained price appreciation is unlikely to occur independently of regulation. Instead, regulation acts as the final unlock, converting uncertainty into access. When that transition completes, market behavior changes permanently. The question is not whether this shift will happen, but whether its significance is recognized before it becomes obvious. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.